Hemant. Quite a lot to get through today, so let's get right on with it. The first big story of today is that they get India fully back to business. That seems to be the goal across the nation. It's the front page of the newspaper today, perhaps the largest story. And all the bigwigs, Deepak Parekh, all the major heads, Amitabh Chaudhary talking about how that's of prime importance. Moving forward quickly, malls, cinemas may open at night in green zones, so we're hopeful of that. Home delivery of liquor in some states might become a possibility, but nothing definitive heard on that yet either. Gadkari, norms to restart public transport soon. So they're trying to get the trains, buses up and running as well. But again, we're waiting to hear final details on that. And finally from here this morning, Surat may lose a cutting edge in its diamond trade, something the papers are also flagging off today.
Apart from that, you have auto sectors that may roll out incentives to draw the customers. Remember that particular sector is taking a huge hit due to the lockdown and the halting of productions, where now they're actually slowly starting to actually build on their production. Next up, we have services activity that's fallen, which has recorded the steepest fall in 14 years. The construction sites will now have COVID marshals. Remember, some places they've allowed construction and the workers, only those who will stay within the construction sites are allowed with the construction activity. Next up, we have global brands that will tap India for fashion masks, and Enforcement Directorate will file their first charge sheet against Rana Kapoor. So those are the top headlines that's there this morning on the Economic Times. But let's straight dive into the top headline and the front story, the lead story on the Economic Times. But before that, Varun, why don't you take us through the top market headlines?
Sure, Sharon. Let's get you up to speed with the market page. For HUL, quite a big week and a big development happening. GSK-HUL is to sell shares in HUL worth around 26,000 crores. So while this has been an overhang on the stock, it's also a lot of supply that needs to be absorbed in the current market. And HUL has corrected a fair bit, also post its Q4 numbers showing some volume degrowth. So quite a key story. The next one, which seems to be hogging the limelight today on the markets page, right at the top there, you're talking about SBI extending moratorium to NBFCs. So we all know the NBFCs are in trouble. There's no moratorium for them, but they have to give to their customers. So some aid finally coming in for them there. And the next, SEBI is easing some norms for rights issues. So that's quite self-explanatory, and we'll be bringing you more on that later. Analysts expect Nifty to rebound, to be range bound. That sounds more correct. So, it seems there's an upper limit and a lower limit fixed in which Nifty will be trading. And finally, corporate FDs are offering up to 7.8%. So they've gotten really lucrative, and they're attracting a lot of investors.
Right, those are the top market headlines, but let's move on to the top corporate headlines. You have Kishore Biyani that may sell big future stake to Amazon. That's the top story this time around on the Economic Times. On the corporate news front, you have Yes Bank's Q4 that losses have more than doubled. No surprises coming in there. Yes Bank reported their Q4 earnings late last night, and the losses have more than doubled there. SBI and others revive a bad bank proposal. The CVC cap is set to acquire large stake in HCG, and Airtel and Vodafone Idea bring customized offers for MSMEs. So those are the top corporate headlines on the Economic Times. But let me get you the lead story on the Economic Times this morning, right on the front page. And here you go. Get India fully back to business. That's the word coming in from India Inc. You have Deepak Parekh, you have Venu Srinivasan, you have R.C. Bhargava, as well as Amitabh Chaudhary, who've spoken to the Economic Times, and all of them echoing the same thing, that we need to get the economy back on track. They're saying that the industry captains say the economy and jobs must be the central focus now, and the policy makers have to recognize the country will have to live with as well as work around COVID-19. So there you go. all the market participants, the industry captains, echoing the same thing: get the economy back on track. The industry appeals the government that economy and jobs must now be the central focus. The country will have to live with and work around COVID-19. So that is the top story this morning on the Economic Times.
Thanks for that, Cheryl. Definitely a very key story. Thanks for bringing us an update on that. We're now going to switch gears a little bit, but again, a very important story on page 4 of the markets, hogging quite a lot of space up there, the GSK-HUL stake sale. Pankaj is now joining in. Good morning, Pankaj. Welcome to the show. What does this deal mean? You know, it's such a large amount that needs to be absorbed by the market. Who are the stakeholders, and how is this going to affect the HUL counter?
So, we got you this exclusive story yesterday that GSK is, of course, looking to sell out, stake as far as HUL stake is concerned. It's about 5% stake that we are looking at, which roughly comes out to be about 3.2, 3.4 billion. So close to around 25,000 crores is what they're looking to raise. As you said, it's a big amount. 3.4, 3.5 billion dollars is what you're looking to raise. They opened the book yesterday, but remember, it's also shares of HUL that you're talking about. Hindustan Unilever, by far one of the largest FMCG companies, by far one of the best brands here in India. So 1,850 to 1,950 is the range. What I can pick up is the response so far has been good. It's a mix of FII as well as DIIs. It's a very big book, so who's of every investor will be needed. Now, when I talk about bankers, the likes of Morgan Stanley is one of the bankers, the likes of JP Morgan as well as HSBC. These are the three bankers who are putting the book together. And most likely, the deal should happen this morning once the market or the trading block window opens. We'll keep our viewers updated as and when the deal happens and volumes reflect that, a big block deal has already happened.
All right, Pankaj, thank you for bringing us that story and taking us through the entire GSK parent stake in HUL. But let's move on to another big story that's there on the page 5 of Economic Times, and that is Biyani may sell big future retail stake to Amazon. Kishore Biyani is all set to sell stake in future retail to Amazon, and this is all to pare the debt of the company. To get more details on the story, we are joined by Winnie this morning. Good morning, Winnie. Take us through the story.
Cash-strapped Kishore Biyani is looking to sell big stake in future retail to Amazon. Now, high debt levels, the crippling blow of the sales on the retail business due to coronavirus has surely, pushed Future Group to look at other possible opportunities of how to survive and make the company survive as well. So that is why they're looking to significantly dilute their stake in future retail. That is one of the possibilities. Now, Future Group is considering to demerge its future retail business into a separate entity that will be compliant with the FDI norms. India, currently allows 100% overseas capital in retail entities that deal in locally sourced and packaged food items. So they'll be forming the future retail, demerging the business into such norms. Now, currently for future retail, food accounts to around 50% of sales for Big Bazaar hypermarket. So that is one of the very big part of future retail as well. Now, this is not the first time that future retail will be entering into a deal with Amazon. Last year, Amazon had bought 49% stake in Future Coupons. Future Coupons owns 7.3% stake in Future Retail. So, we'll have to see how this deal actually works out. And if this deal goes through, Amazon will roughly hold around 3.6% stake in Future Retail.
All right, thanks for that, Winnie. Really interesting. Switching gears, though, the RBI may tweak its policy encouraging banks to lend more. So my colleague Soumya is now with us. Soumya, they've dropped the CRR rate. They're cutting the repo rate. They're doing targeted long-term repo. What else is the RBI really looking at that's going to push banks to lend?
Well, that's exactly right, Vaibhav. In fact, amid the dire sagging credit demand and also higher risk aversion, the banks are parking more funds with the Bank of India and are not lending so much as the RBI had expected. Like rightly put by you, the reverse repo rate was also decreased and in fact lowered in order to banks to lend more. So there has been a mechanism through which the RBI plans to transmit the lowered rates to the entire economy. However, that transmission has been hampered, and RBI, as a result, is thinking of measures and is looking at tweaking the policies for banks to lend more. And, in fact, the TLTRO also received a very weak response owing to the fact that banks were risk-averse to lend. So this is something which everybody is looking out for, and the banks to actually pump up their lending to the economy. So we may see some amount of pushing by RBI so that banks lend to the economy and we have the credit flow system moving.
All right, Soumya, thank you for taking us through the story this morning. That is the RBI meeting policy to push banks to lend more, park less of funds. But let's move on to another story on the banking space, and it is in the ET markets, the top story that's there, and that is SBI to extend moratorium to NBFCs. This is what the sector was hoping for, and SBI is going to go ahead and do that. They're going to extend the moratorium to NBFCs. The companies will have to apply for the benefit. They will have to, and those who will be eligible will have to show shortage of cash, and they will actually have to show proof that they will not divert the funds. So this is what is the top story on ET Markets page. But to talk more on this, what does this mean? We have Neha Tyagi joining us. Good morning, Neha. Take us through the story.
That's right. The State Bank of India has finally agreed to extend the benefit of moratorium announced by RBI to the NBFC sector. The decision was taken in the bank's board meet today. SBI will extend the moratorium facility to NBFCs, but on a case-to-case basis. This is not a blanket moratorium, and all NBFCs will not be able to avail this facility. SBI will take a decision on the basis of the cash budget of each of the NBFCs on whether to give the facility to them or not. We understand several NBFCs have already approached the lender. SBI has already been extending fresh loans to NBFCs in need on case-to-case basis. Now, this comes shortly after the meeting that took place between RBI and public and private banks. We understand that RBI officials had told bankers that it was their discretion whether they wanted to extend the moratorium to NBFCs or not. NBFCs and microfinance institutions, on the other hand, had met RBI and requested for the extension of the same. The Supreme Court also had directed RBI to ensure that the benefits of moratorium were passed on to all the consumers in letter and spirit. So it does come as a very good news for the NBFC sector that has been going through a lot of stress. NBFCs on their part has extended moratorium to all of their borrowers, but they were facing liquidity mismatch because the same facility was not extended to them by the bankers. But now that State Bank of India has agreed to extend this moratorium, we understand that several other public sector banks will follow suit.
Right, Neha, thanks for that. Very interesting. NBFCs expected to pass on moratorium but not given any themselves. Quite interesting. Now, switching gears a little bit and diverting slightly away from the paper just for a moment, we're going to bring you the Yes Bank review. The numbers were out last night. Now, based on our poll, we thought NII would be 800 crores. It actually came in significantly higher at around 1273, so it's quite a beat. It shows that the loan growth hasn't slowed as much as we thought. On the profit level, there's a loss, considerable loss of around 3,600 crores. But again, our poll indicated that the loss could have been as high as 7,000 crores. So it's a beat on that front as well. Last quarter's exceptional loss of 18,000 crore, there's no point comparing it against that. But YOY, the loss has doubled, but we all know what Yes Bank has been going through. Now, specifically, sequentially, just two key things I want to highlight. The gross NPAs have come down, as have the net NPAs. Your capital adequacy is currently at 8.5, which keeps it it's reasonable. And your provisions, while they have gone up to 4,800 crores, they look smaller sequentially, but that is something that shows that the bank is preparing for some further stress as well. The provisions have shot up quite a bit, and if you look at it on a YOY basis, it's almost a 40% increase, so quite large over there. That being said, in the current environment, not a bad show from them.
All right. Thank you, Varun, for taking us through Yes Bank's Q4 earnings review. But let's take a look at another story that's there on the front page of Economic Times, and that is the malls, cinemas, and retail shops may actually get to open at night in the green zone. So the talks, internal discussions on allowing the malls to open in green zone is underway. The Health Ministry and the Home Ministry will take a call on this. Why are they going to do this? Because they will slowly be able to restart the economic activity while trying to maintain social distancing norms. They're saying they may prevent panic buying by doing this. Most importantly, they will be able to retain employees. Remember that with the malls, with the cinemas, and with your retail shops being shut, you have a lot of them, the workforce that's sitting at home with the fear of an uncertain future. So for now, this is what the story is saying, that the malls, cinemas and the retail shops may get to open at night in green zones. But yes, the discussions are still underway. The Health Ministry and the Home Ministry will take a call on this.
Right, Cheryl. Quite an interesting story. Switching gears a little bit, Nitin Gadkari has come forward and you know, he's talking about the resuming of operations as far as road transport are concerned. So this obviously includes movement of goods. I'm assuming it also includes regular road services. So he talks about how vital it is to the economy that this sector revives itself. At the same time, there needs to be social distancing norms put in place. There needs to be a lot of regulations introduced before this can resume on a large scale. So in the near term, due to these systems not being in place, he foresees that there's going to be some challenge for businesses and companies to move their goods around. And you know, so we hope for the best, but it's definitely going to be a slow, staggered start as far as the roads are concerned. It's not going to be a complete 0 to 100 like some people might have previously thought.
All right, and now let's move focus and let's talk about the top headlines on coronavirus in the Times of India. And there you go. First up, you have India has actually gone ahead and breached the 50,000 mark when it comes to the coronavirus positive cases. Apart from that, you have 3,600 positive cases reported in a single day. That is the sharpest spike that we've seen. Moving on, you have the active cases that are growing at a faster rate at that is 6.6%, but the doubling rate has fallen to about 11 days. That is the doubling of the cases. That's seen a drop. BMC has come out with a new notification. They are saying that only 2 shops will be allowed to open in a lane, and that will be a hardware and electronic stores. They're saying the IT systems, gadget repairs are essential, so therefore they've gone ahead with this move. That only 2 shops can be opened in a lane of hardware and electronics. And last, we have Mumbai that has reported 10,000 total cases of coronavirus, 10,000 positive cases of coronavirus in Mumbai, and the BMC is rushing to ramp up hospital beds as the deaths have increased to 400 in the city. So those are the top headlines coming in from Times of India on coronavirus.
With so much happening in the equity markets and all the forces at play, we caught up yesterday with Nilesh Shah from Kotak to get his take on how investors should be proceeding and what they should expect. Let's listen in.
Nikunj, everything will depend upon intersection of medical solution and fiscal and monetary stimulus. If we are lucky and we get early medical solution and we get fiscal and monetary stimulus, which is more than needed by the economy, then markets will stabilize. However, in that unfortunate scenario where medical solution is delayed and we don't get fiscal and monetary stimulus which is required by the economy, then certainly markets will continue to slide. I think this is where markets and economy both will be looking forward to, intersection of medical solution and fiscal and monetary stimulus.
So, all right, and that's a roundup of all the top stories on the Times of India as well as the Economic Times. But here's a special segment For the news for the hearing impaired, listen in.
Hello and good morning. You're watching Doordarshan News and this is the news for hearing impaired. I am Nancy Kohli and with me is Manisha. Let's begin with the headlines.